I discussed in my blog published earlier today purchasing several closed-end investment companies that pay monthly dividends. A closed-end fund has a fixed capitalization, unlike a mutual fund that is open-ended. A closed-end investment fund will trade like a stock on the stock exchange. Consequently, it can be bought at a discount to net asset value per share, whereas mutual funds are bought and redeemed at net asset value. I will include a link to a website that explains this type of investment in more detail. I have been investing in closed-end investment companies since 1984. One of these funds that I discussed in my post today is Blackrock Science and Technology Term Trust that has the trades under the symbol BSTZ. It is one of the more unusual ones that I currently own. While this fund will own stocks that trade on the stock exchange, the fund has a substantial weighting in equity positions issued by private companies that I would describe generally as involved in cutting-edge technology such as AI and quantum computing. The only one that I recognized was ByteDance, which I believe is TikTok. Last Friday, BSTZ closed at a claim discount of 21.03% to the net asset value per share. I use the word claim since placing a valuation on private equity position is at best mushy. I have no idea whether any of those investments or all of them or some of them will work out successfully. But the fund is a cheaper way to gain exposure to those type of companies compared to paying a hedge fund manager. The expense ratio is about 1.33%, much lower than what a typical hedge fund would charge for these types of investments. The dividends are paid monthly at a variable rate. The only way for this fund to earn the dividend is through realized capital gains, and there's no telling when the fund may sell part or all of a private equity position. The fund has filings with the SEC that I cite a link to my blog. I also cite in my blog a link to the sponsor's website. As of September 30, 2023, the firm claimed that the investments cost it $1.181 billion, and the value then was 1.586 plus billion, so a little more than a $500 million unrealized gain. I will leave some links to CEF Connect, which has more information about closed-end funds. I would just say that the closed-end fund structure predates the mutual funds. Many of the closed-end funds that existed prior to the great crash of 1929 were highly leveraged, and many of those highly leveraged CEFs owned shares only in other highly leveraged CEFs. And needless to say, none of them survived for very long. There are several that I own that did survive because they were unleveraged and have been successful overall since then.